Hi, everybody, and welcome to the January 13th issue of the Tucson Mortgage Almost Weekly. I'm Todd Abelson, and I thought I'd just kind of chime in on what we see going on in the market. Last week, the employment report came out, and it was actually a pretty darn strong report, and the revisions were equally strong. But the market really didn't like it because, interestingly enough, the hourly earnings went down. So as much as more people were working, it seems that they were taking lower paying positions. The theory being, if you're not making the money, you're not spending it. So it doesn't matter how many people are working. If they don't make enough to live, they're not buying. So the stock market didn't like it. You connect that up with the fact that oil has pretty much touched on some multi-year lows. In fact, as of today, it was down as low as about $44 a barrel. And I'm sure, like me, you're looking at the fact that gas prices are about half of what they were a year ago at this time. And that's really great. And quite frankly, the stock market doesn't like it because that means that there are companies that are not doing very well. But I'll tell you the truth, if they're getting spanked by ExxonMobil, Chevron, Shell, and every other big international oil company that stuck it in our ear for so many years, raising the prices and playing games with production and slowdowns and whatnot, let them all sit on $1.80 a gallon gas for a while and let them use some of their reserves to pay for it. So good for us, bad for them. It's our time to get a little bit of a payback. So, okay, ExxonMobil, payback's hell. Remember that next time, okay? All right. What else is going on in the market? Well, the alternate reality to this is that right now the 10-year Treasury note right now is actually down at multi-year lows. You may remember earlier this year what really ticked off the lowering in interest rates as we saw the 10-year getting down to as low as 187. And we're pretty close to touching on that right now. So ultimately, the market is really at a position where rates are really, really, really low. But there's been a lot of volatility in the stock market and the bond market trying to find some stability. And there could be some big swings in both. In fact, today the stock market was up 200 and something points only to end up down about 80. So you're talking, 300 plus point swing in one day. And we're seeing some of those in the bond market as well. So the good news is rates are low. The good news is they're probably going to stay low for a bit, especially with oil prices being low. The problem is we're going to have some volatility. So when you get a rate you like, lock it in. You can always potentially go back and renegotiate it, but at least catch that beautiful low rate. Don't forget to check out the blog site because there's lots of new stuff coming out. We've got lower mortgage insurance. We've got 3% down conventional. We've got changes in reverse mortgages. We've got changes in the appraisal industry. So there's a lot of stuff coming out right now. You should definitely be checking things out and staying up to date. I'm Todd Abelson with Sun Street Mortgage here in sunny Tucson, Arizona. Make it a great week. Bye-bye.